Hi everyone, and welcome to the second day of the Food Biotech Congress. And we're going to kick off with our first session, which is talking about the investment landscape across the European markets. Just a quick reminder for me, for anyone that joined yesterday, but also maybe joining for the first time today, we want these discussions to be as interactive as possible. So feel free to ask any questions or any thoughts or any comments in the live discussion box, which you can find at the bottom right-hand side of your screen. So I'm going to swiftly move over and introduce our moderator for today. Our moderator is Alexander Hoffman, the managing partner from KSV, and he'll be leading the discussion today. Thank you, Alexander.
Thank you very much, Jade, and hi everyone. So first of all, thank you very much, Jade, and also the Food Biotech Congress team for making this event possible and inviting all of us. It's really a big pleasure to be moderating the session on European investor insights today, especially with such a distinguished group of investors and innovators in the food tech space that are today on the panel. Let me start maybe with a very quick introduction of myself before I hand it over to our great panelists. My name is Alex Hoffman. I'm a managing partner at Kingston Schweizer Ventures, which is short KSV, which is a newly founded venture capital firm focusing on impact and climate tech investments, where food and agriculture will obviously play a significant role. I've spent the last years at M Ventures, which is the corporate venture capital arm of Merck, where I focus on frontier tech and sustainability investments. And as part of that, invested in companies like Mosa Meat and Formo, which are developing cultivated meat and clean dairy, respectively. So with that, I'd like to introduce, or to ask our panelists to introduce themselves today. And I think everyone can do a much better job at this than I would ever be able to. So that's why I would prefer to hand it over directly in the following order. And Roy, if I could start with you, please introduce yourself, that would be great. Thank you.
Yeah, thanks, Alex. Yeah, my name is Rodrigo Hortega, or Roy, as you wish, originally from Mexico. I have been working the last 4 years for Döhler Ventures, and I'm responsible for all the investments happening in Europe. We have basically two axes of investment. One is more into the consumer brands in the food and beverage industry. And the other axis that we have developed over time is more technology driven, where we are looking into disruptions that could be happening into our industry. There are specific topics that are more relevant for us. And one of the key learnings that we have had is that we would like to focus on topics on the technology side that are relevant for the group in order to accelerate their path to market. That's basically what we have found in the last few years.
Great, thank you very much. Gil, could I please hand over to you next?
Sure, great. Thank you very much, everybody. My name is Gil Horsky, and I'm a part of Snack Futures in Mondelez. Mondelez is the largest snacking company in the world, playing in categories such as chocolate, biscuits, cookies, gum and candy, with brands such as Milka, Toblerone, Oreo, and many others. But Snack Futures is a smaller team. We're an independent venture and innovation hub of Mondelez, and we basically have three pillars. We manage a company's corporate venture arm that mainly invests in emerging well-being snacking companies. But recently, we've also expanded in the last year into food tech and looking at technologies and capabilities that can be linked into healthier snacking. The second pillar is we manage our company's incubator. We incubate ourselves new brands and businesses for the company. We have a special methodology. We do it and we launch very quickly in the market and test different concepts. And if they work out, we scale them very quickly. And the third pillar is actually we launched a few months ago, CoLab, which is our acceleration program that we bring early stage companies. We partner with them, help them grow and give them some support. Great being here today. Thank you.
Perfect. Thank you, Gil. Paddy, you're next on my list, please.
Thank you, Alex. Hi, everybody. So I'm Paddy Willis. I'm CEO and co-founder of Mission Ventures. Mission Ventures exists, if you like, at the interface between larger organizations and corporate partners and the startup community. So we have two main, I wear two main hats, I guess, for this session today. Within Mission Ventures, we have a corporate partnership with Warburton's, which is the UK's largest bakery business and happens to be the most purchased food brand in the UK, which is where we look to invest in exciting and interesting CPG brands that have baking somewhere within the product mix. Deal size typically 150 to 500K. And the Good Food Fund, which is an impact fund focused on childhood obesity, backed by two of the largest impact investors in the UK. That's been a pilot fund over the last 18 months. We're looking forward for this growing next year, but that can be a combination of CPG and also food tech and ingredients. Again, similar sort of roughly 100K to 500K in the investments made to date. They've been primarily UK, but we are always open to looking at European opportunities.
Great, thank you, Paddy. And last but not least, Dikla, could you go next, please?
Yeah, sure. Thank you all. So my name is Dikla. I'm a Director of Investment and Strategic Partnership at the Kitchen Hub. The Kitchen is a seed investor and a food tech incubator based in Israel. We are backed by the Strauss Group, which is the largest Israeli food company. And we are investing through all the value chain of food tech.
Perfect, thank you so much. And maybe to really start setting the scene on the topic of today, which is European investor insights, I think one of the key items to discuss, or maybe to find out from all of you who have, who are investing in that space, is what I'd love to understand is how you currently look at startups, and maybe if we could make it in a systematic way to really speak about the top 3 items that you are looking in a startup when you are investing or partnering with, in also the specific, let's say, order of priority and why that is so. And maybe we can start in reverse order. Dikla, maybe starting with you on, the top 3 items you would look in a startup.
Yeah, sure. Thank you. So the most important thing that we invest in is the team. We need to work daily with the teams that we are invested in. And this is why the team is the most important part of our investment. The second part is market. We need to have a market to the product of the company. And if no one will buy the company's products, so it doesn't matter the technology or the team. And the third part is the technology. So we invest in deep tech, in the food tech, and only companies that have a real difference in the market regarding for what they are doing and the technology that they are bringing, will invest in.
That's great. Very good to know. Thank you, Paddy. Moving to you.
Yeah, unsurprisingly, team is typically top of the list, and with that comes the market opportunity. Niche can be great and often a good place to start, but if you're looking at this as a scalable opportunity, what is the overall scope of the investment that you could be making? And then if I look at it from the perspective of the Good Food Fund, which is our very mission-led impact fund, coming back to the point about team, it's very much, is there an alignment on mission, or is there, to use a common phrase of the last 10 days or so, is there a kind of bit of a greenwash going on? Are people fully bought into this thesis of wanting to try and disrupt the food market from the bottom up by bringing healthier challenger brands to market, which is what the Good Food Fund program is all about? And therefore, are they willing to, to be on a journey to get their product to a point where it can be competitive with the mainstream? So those, I guess, would be my 3.
Great, very helpful. Thank you, Gil. If I can ask you the same question.
Yeah,
please.
so quite similar, but maybe just a little spin. I think, as I mentioned, we invest in mainly in brands, but also in technologies. And when we would be on the technologies, I would like to say we kind of, I look at least in the 4 T's, which is the team, TAM, so total addressable market, the technology, and actually timing. And when I mean timing is a lot of times we see some super interesting technologies but we actually, our perspective would be, listen, until this thing can scale and be at a cost parity and get to the market, we as an operating company that want to have an impact, and in also, of course, long term, but also we're looking at wins that will be next year and 2 years. The timing doesn't always work. So things that will be extremely long term with a very high timing risk, we won't go. But then sometimes you see things, new technologies, and the timing is exactly, there's a breakthrough or the market has changed, and that's a perfect time to jump on the bandwagon and invest in those. So that will be on the technology, the 4 T's. On the brand side, team still, I know we're all consistent, that's good. We didn't try before, but that means that we all believe in people, and you do invest in people first, so team still. But then we would look at the segment. Again, we are very specific, so we can see amazing companies, but if they're on the brand side, don't have any strategic link for us, that won't be relevant. Even if the company is outstanding, performance, team, everything. So we would look at the segment. It has to be a segment that is in the broader world of snacking. That's a very broad space, but that still has to be a key criteria for us. And then we would look at performance, because in the brand side, we won't invest, different than technology, we won't invest in pre-revenue or things that are still in the concept or proof of concept phase. We want to invest in real businesses, and we're going to look at revenue, we're going to look at velocities, we're going to look at repeat data, we're going to look at who the consumers, and that will be a key element of our decision.
Thank you so much, really great insights. And Roy, maybe you as well, please.
Yeah, definitely. And yeah, basically, as a seed investor, you need to focus a lot in the team, like all my colleagues. Something that I will add to that is that we are trying to invest in first movers into one trend, into one technology, something that we haven't heard or seen before, at least in Europe. So we believe that it is extremely competitive, the market food and beverage. So that's why we want to have the first mover advantage. This is also one of the criteria that we have. And something that we really take as a core, and I can imagine that this is similar for Gil, that is also coming from a corporate investing arm. We understand profitability on the long term quite well. And this is embedded in our blood, basically. So we really need to have a clear view on what is the profitability path of the company and what is the time frame that they are looking at.
Perfect. Thank you so much. I'll add my perspective as well, because I think I would say generally agree with all of the points made. And I think this also just highlights which investor looks at what first and which priorities they set. So in our case, given that first and foremost, we see ourselves as impact investors, so the actual impact that the company has, or the potential of impact, is something that we would basically use as a first filter, because at the end of the day, what we're trying to assess is the potential that the company has in terms of a positive impact, whether that's on climate or social related items. But obviously, then anything that makes it happen, which is in second line, the team, that is obviously for us very important. And we've heard that many times already today. The team, I think, is for every single investor one of the core items to look after. And then thirdly, indeed, the market, because I think this goes hand in hand with also the potential impact that a company can potentially achieve, or an industry which will be established as a new industry. So I think overall, the idea of that exercise right now was really to show that different investors have maybe different priorities that they set, but ultimately that we all, of course, are looking at a very similar type of filters and considerations when looking at a company. And I think maybe spending a bit more time on one topic that Gil mentioned, which was the differentiation between technology and brand. And that's obviously something that we see quite a lot in food technologies, where you have, the more very technology focused type of companies that will probably be for a longer time in R&D mode, and those companies that are, leveraging from very early on either existing technologies and building a brand on top of it, where other criteria are more important, like performance, revenues, etc. So maybe Gil, if I can, ask you to step into that discussion a little bit more and try to, from your perspective, also explain how you would look at those two differently, and what the main criteria for each one is, and then would love also everyone else to chip in there.
Yeah, I mean, I think Great question. I think first of all, the good news are that today I think the lines are blurring. For those of us and a lot of us here, I think everybody on this panel has been a long time in food tech and agri-tech and this business before it was sexy. And I would say that in the past, and probably until recently, the world was really separated. You would have funds and investors and strategics that would do brands, and you had ones that do technology, and it was very clear B2C and B2B, and everybody had to have a very clear definition. Are they in that world or that world? I think now it's blurring, first of all, right? So we're seeing a lot of the B2B food tech companies on the technology side being pushed by the investors and the market to say, don't wait for big companies until they'll take your ingredient or technology and bring it to the market. Do a small proof of concept, go till the end, do your mini brand, your test market, your limited edition. So I think we're seeing that blurring, and we're seeing that also blurring on the investor side. A lot of the funds that used to do only one thing are starting to do the second. And the same is with us. I mean, and very honestly, when we started off 3 years ago, our mandate initially was on the brand side, a B2C. We're a strategic CPG player, and we were looking to invest in companies that we can view them potentially one day as a potential M&A target. It doesn't mean that that's what's going to happen. A lot of investments didn't end up being acquired. Some did, like Q Kitchen in the US is a company we invested in, and 2 years later, we actually offered to buy them and we bought them, but that's not always the case. But I think now everybody's seeing that because the lines are blurring, because we all want to impact the value chain in different ways, because we all have similar challenges that you brought up around impact, about sustainability, we need to start investing in other things that are not maybe the core of what we thought we're doing. And that's where it's becoming interesting. And I think specifically on the brand side, I would say, I think the brand side of investing, I don't know if the right word to say, some of my colleagues will kill me if I'll say this, but I don't know if it's right to say it's easier. I don't think it's easier, but I think there's a very set lens of criteria, especially if you invest in things that are already in the marketplace. If it's pre-revenue, then we're all guessing. It's very hard to know what's going to work or what not. I mean, maybe Paddy's a great investor, has a lot of experience, he can project it, but it's usually very hard. But once you're in the market, there's quite a set of criteria that investors are expecting around velocities, around repeat. You have benchmarks, you can look at old case studies, you can look at the category, and you could quite quickly do a good job of seeing if this is a winner or not. Now, of course, if you're a great investor, you can also look at the lens before and say, maybe it's not doing well, but if I'll change these 3 levers, it would do well. But I think it's within a realm of the metrics. I think when you come to the tech side, and a lot of you guys here are bigger experts than me on this side, I think that's actually more complicated, because then you're really pre-market, you're betting on a team, you're betting on them telling you that all the things they're saying in the technology are actually going to happen, which we know never happens. So the question is how difficult it is going to be to gap that thing. So I think that's where you actually need to bring a lot of technical expertise, and that's what we do. When we invested together with Dikla and her team in an Israeli food tech company, and we obviously leaned a lot differently than when we invest on a brand. We leaned on our R&D colleagues and our IP lawyers, and we go much deeper then into, is there really IP here, and do we think we can get future IP, and do we really believe that this tech can work in the long term? So very different style of due diligence and metrics. But I think, to just summarize, I think it's a really exciting time in our industry today because of the blurring of the lines.
Thank you. Super interesting insight. Maybe Dikla, because you also mentioned that deep tech is something that you are focusing on, and touching on that topic of how do you go about companies that are more complex or have a more fundamental technology or science that they are bringing to life, and how you assess basically the feasibility of that.
So as an investor of pre-seed opportunities, we need to understand very well the market and the need and the pain of the customers. So it's very, very early to start and understand brand or strategy, B2B, B2C, B2B2C, ingredient or CPG, because it's very, very early in the stage of the company. And also for early stage, CPG is money consuming. So at this stage, it's less relevant. We need to focus on the technology, on the innovation, on the solution that we are bringing to the end customer and to the company customers. So we are working daily and very hard with the companies and with the teams to understand all of these issues. We are working with them on the technology side, on the business development and the commercialization and the whole step, everything that they need in order to give a great solution from the beginning, and then start to understand the strategy and the business of each project. So it's a combination of both brand and technology and the opportunity of the market and what the market needs. And it's very variant. We invest in everything.
Mm-hmm. Great. Paddy, Roy, would you like to add anything on that specific topic?
Yeah, I mean, it's a fascinating one, and I agree with both what Dikla and Gil has said, particularly Gil's point about needing to lean on the scientists and the R&D guys when it comes to understanding a bit more about the science. I mean, what I would say is that ultimately at the end of the day, the consumer is the arbiter, and a consumer. What is a consumer? They're a human being. We've already talked about the fact we invest in predominantly in human beings and people in the team. And so what is their emotional response to this? It's very hard to have an emotional response to technology. Brand is different. You just look at Apple. Okay, so I'm an Apple user, hand up. Is it the best technology? I have absolutely no idea. Do I love the brand? Yes. And I'm not somebody who's going to go and queue outside the Apple store in Regent Street in London, for 24 hours to get the new latest whiz-bang gadget. But I totally buy into what the brand looks like, feels like, etc. So I digress away from the right kind of technology. But I think for me, it's about does the consumer trust the brand? Do they trust the brand enough to try that new product? And ultimately, of course, in our industry, everything's about taste. It doesn't matter how great the technology is. If it doesn't taste great, they're not going to buy it again. And to a point Gil made, about timing. I love the 4 T's. I might borrow that. It's about, we've all seen products that meet a very specific need, particularly if it's an ingredient-led need. But if you can't explain to a consumer, or even actually to another food brand that might use that ingredient, how they're going to interpret that into the consumer's world, for them to understand why this is better for them, then that becomes really, really hard. And we've seen that, we tend to work predominantly with startups, but we've seen brands where they've really struggled to get traction with their core ingredient with big food brands, where obviously the scale exists, but that's because an existing brand of scale would have to be re-engineered, and we all know how difficult that can be. So they often will end up saying, look, actually, have we got some scrapping little fast-moving startups that we can prove this point to, in order to then kind of bring the market with you. And it takes a lot longer than you think logically and sensibly that an enhancement or improvement to a food product shouldn't take that long. But on the one hand, you've got human beings, and those human beings are running corporations, and corporations take a long time to change their direction. So I find it absolutely fascinating, but it does come also, the other thing, of course, is brands can be tweaked and changed. And our friend, Mr. Zuckerberg, obviously has done quite a big tweak recently to his famous brand. But technology is much harder to do that. Technology will evolve and it will be on a journey, but you can make a 90-degree, 180-degree turn on a brand, but much harder to do that with technology. So there's a degree more flexibility with brand, but it is brand that ultimately the consumer is going to buy.
No, but very good points and insights. And I think to the point, and there's one question also from the audience, which I think fits well to the discussion, because probably also depending on what a company is doing or focusing more on technology or brand, or in some cases both, right? One doesn't exclude the other. But maybe Roy, a question for you, because a question here that we got was, with teams, of course, being a top priority when looking to invest, what are the key attributes that you would look for within the team if it's a company, working in food or, let's say, ingredients, in the ingredient space? I don't know, Roy, if you want to take that as well, I think this would be good insights.
Yeah, no, definitely. And maybe talking a little bit more about the brand versus technology or both of them. So what we are looking in the team and basically on the space of branding, one of the main attributes of this industry is that most of the brands, at least that we know, they are not taking care of their own production of the goods. They are outsourcing that and focusing a lot on brands. So if this is the case, we would like to understand, since you cannot have a protection on the technology of producing, because you also want to reach scalability as soon as possible. So what are your key competences on branding, storytelling, sales, access to retail? And also, how can you make your company defendable on other edges of technology that doesn't relate to production of your good? Meaning access, so it can be new business channels, new ways of attracting customers, managing social media like nobody, or it can also be, fulfillment centers delivering in one day. So how do you want to focus, and do you have the right team for that? When we look into technology investments, so for sure we want to have someone really expert on the area that they are talking about, also with industrial expertise. And because the main problem of technology is how to make it scalable at an efficient cost. And this is something that you will gain by working with a corporate or an industry beforehand, and not just coming out of the university in that sense, even though that they are extremely good scientifics. But we know that you will hit something, a rock at the end, and then we want you to be prepared for that. Or also, if you think about the main problems that you will be facing in the future due to scalability of your product, then you will be able to think beforehand in a different way in order to reduce the amount of feedback loops that you're having there. And also, one of the key competences that you will need to have on technology-driven companies is fundraising skills and hiring skills. And this is something that we really like to focus on, because if you are not able to hire people, then your company won't move as fast as you can. And usually the people that are really good at fundraising are really good at attracting talent, because they are able to sell their story in both ends. And this is why we are basically looking on that. And also on the brands, we are also focusing on terrific fundraisers, because you are also able to sell your product brand. So those are the key competences that we will be basically looking at.
Thanks, Rod. It's a very, very good points. I think especially on the storytelling, let's say, well, let's call it sales, because at the end of the day, you need to sell the vision, the story of that company. And I think it would, in best case scenario, convince both investors as well as future employees, which of course makes a lot of sense for any scale up of a company. Thanks a lot. I think really great insights. I'd like to maybe spend a little bit more time also on another topic that was raised earlier. I think Paddy, of course, with your different hats on, and one of them being primarily around impact, and how you want to be aligned with founders who have that specific purpose and are mission driven. So I'd like maybe for you to start with, how do you look at this? What are the criteria you would want to see in companies that claim to be mission driven? And secondly, also to the rest of the group, how do we think will this affect future fundraisers of any companies in that space? How big of a role will it play? So yeah, Paddy, it would be great to hear your point of view.
Yeah, thanks, Alex. No, it's I mean, we're called Mission Ventures for several reasons, but certainly because we want to have an impact. We're as a board, we're a group of entrepreneurs who've all launched and built and sold our own CPG brands in this industry, and we're now really excited to be working with usually younger entrepreneurs on their journey, trying to give them some guidance on that, and then link that to the relationship with our partners. So in the context of the impact that we're seeking to make on the Good Food Fund, as an example, we are working with one of the foundations of one of the UK's leading hospitals, and they have a 10-year program looking at childhood obesity amongst other programs. And so this is all about trying to see what can you do to help healthier challenger brands to become have impact in the market, which basically means they have to be affordable, because you're 3 times more likely as a child to leave primary school age 11 if you live in a poor neighborhood than if you are in a wealthier neighborhood. So you know, fish where the fish are, if you like, in that context. So what we're looking to try and do is see what can we do to help brands to impact, and frankly, you know, to tackle the likes of some of the wonderful brands that I enjoy and that Mondelez produces, to, you know, compete for shelf space on there. And eventually, hopefully, these guys are hoping that Gil is going to put in a good word and a large check will get written. So for us, it's about, you know, in that context, the challenge we have is that most healthier brands, when they launch, are naturally, you know, small production runs, usually more expensive ingredients, and as a result, higher retail sale price. So it's very hard for that to fit the thesis, if you like, of how do we get you to be mainstream. And by mainstream, I really mean being within about 10% on shelf of the leading brand in your category. So the work that we do, you know, has to start with a willing entrepreneur. If your entrepreneur just really wants to be a premium brand, that's fine. I built a premium baby food brand and it worked incredibly well, but it was never going to be affordable for lower income families. So it has to be somebody who wants to be on that journey, who believes in the disruptive capability of their brand. And we as a team have the tools, if you like, to help them to work on how can they improve their efficiencies of production, their ingredients base, etc. And also at the other end, top end, if you like, of their P&L, how can we help them to increase their distribution so that they can achieve scale quicker? But it has to be on the basis that they are, you know, that they believe in the issue, they believe in the opportunity to have an impact on it. And if all that aligns, then there is a potentially opportunity for us to work with them.
Yeah, that's great. It makes a lot of sense. And I'd be curious to also understand from the rest of the panelists who well, don't have necessarily this impact or mission-driven part at the core of their investment thesis. So Dikla, for example, for you, you know, coming more from, we focus on the food technology, etc. How much will you know, sustainability, impact, and all those topics play? How much of a role would that play in your investment decisions?
So it is the base of our investments. So the core business of the Strauss Group and the Kitchen Hub is doing good by doing food. And we invest only in mission-driven companies for better world, better industry, companies that can do good for the society and our planet. And it's not so hard in our field because it's food tech. And I want to believe that most of the companies in this field want to bring a better impact of our health, our future, the planet, the animal, and everything else. So we are totally there. We collaborate with GFI, with the MAF, Modern Agriculture Foundation, and more bodies that are investing and help to invest in companies that have a good impact on the world. And if a company doesn't have any impact or good impact or on the future of all of us, so we won't invest. It needs to be in the core business of the company that we invest in.
Yeah, no, it's what I think, first of all, great to hear, obviously, and as far as I can tell, it's also really something that is moving much more into that direction. Gil, I'd be curious also to hear from your point of view and how that is reflected also in the broader company perspective and being integrated into that, let's say,
sure.
vision.
So I mean, you know, I think first of all, you know, obviously, you know, sustainability impact is, you know, a huge wave that is impacting all of us as human beings, and of course large corporates. And I think we're seeing, you know, all the large companies, including ourselves, taking significant steps for a while, but I think recently even more than ever. And, you know, especially in our industry, you know, a lot around recyclability, and, you know, we're one of the biggest cocoa buyers, so we have already a program called Cocoa Life for several years that is working with cocoa farmers in West Africa, etc. So I think the interesting part is, you know, I always say is These topics, some of them are so big that although we are big companies, we even can't solve them ourselves, right? I mean, if you think about recyclability of plastics, you know, you need, and those are the topics, which is really interesting. You see big companies that are competitors day and night and compete really fiercely in the market on market share, like good executors. On these topics, we all cooperate, right? I mean, there's no competition. You see all the large companies with the retailers that not always are, in the commercial perspective, their interests are not aligned, but when it comes to these big topics, they understand it. I think we all understand that that's not even enough when we come together. We need obviously bigger stakeholders. We need governments. We need the municipalities that will recycle. There's a lot of stakeholders, but I think there's an understanding that everybody needs to work together. On the investment side, I would say that that's actually the place that we're taking it even the further step further, because Mondelez is a leading snacking company. Most of our portfolio today is still anchored in indulgent, and there's still a big market for it, and consumers enjoy eating a great chocolate at the end of the day, unwinding, having a good feeling. Especially in COVID, it was even more important than ever being comforted with some of our snacks. But on the snack future side, and when we incubate or invest, we have a huge focus, and most of what we do, if not all, is actually on the well-being snack side. And that's what I started off at the beginning, both from a technology perspective, if we invested in Tor Food Tech that enables us to create snacks without any sugar binaries, or with some of the brands we invested, such as Uplift Foods, which is a prebiotic snacking company in the US, or Hugh Kitchen that had a very clean label. So that's definitely a key criteria in what we invest. And I expect it would be even more. And a great example is we just announced our second collab, our acceleration program, and we're calling startups to join, and we're looking for companies that are actually having a sustainability or impact angle that is ingrained in their business model. So I think we're seeing, and I think the trend is just going to continue. And I think, like you said, Alex, very truly, it's a snowball effect. I mean, now it's really a huge acceleration, and the companies that are not going to jump on this bandwagon in an authentic way, not in a greenwashing way, I don't think they have necessarily a very bright future in our industry.
Yeah, it's a good point. I think you highlight something that in, let's say, this whole theme will also become more and more relevant, which is impact measurement, and to really try to see, how do we, first of all, define impact? How do we foresee it? And how do we quantify it? And I mean, of course, there are multiple frameworks that can be applied. So I'd also be curious to just hear how you're thinking about that. I mean, Gil, while you're still speaking, I don't know if you either want to start, or Roy, because I think you didn't get the chance to say something.
No, I'm done. I'll let some of my colleagues speak.
I guess on the measurement part and the impact. So I guess we're looking into the impact on a really pragmatic way. And this is, the consumer is asking for those things. So all the mega trends in our industries are pointing in that regard. And that's why we don't call ourselves impact investors, but we only invest in companies that per se are doing impact, right? So Döhler has been a all-natural company. Now it's called plant-based for the last 150 years, right? So it is embedded in our DNA, and we only go in this direction. For sure, you can now measure all the impact, etc. But there are key topics that they only will have an impact, and they are per se really good. So, for example, the concept of beyond the bottle, or replacing, animal proteins. So, regardless of which company you pick, that is a mega trend, and it would be probably a good return on investment. The only way to deliver impact at the end is if they are successful. And that's why we try to maximize the success of our companies in order to achieve the largest impact. So, for example, in the case of Waterdrop, a really interesting company, that they produce a small cube that adds basically flavor and vitamins to the water. The main objective for them, it was to replace bottles, and instead of shipping flavored water, you will just ship a really small cube, and logistically speaking, everything they have way less emissions. We never thought about the impact that they would have. We thought about all the metrics and how easy it was to scale this company, and how it really matches all the trends that you have along the industry. At the end, they have sold more than 100 million cubes already. So you could argue that they have replaced 100 million bottles out of our oceans or recycling budgets, whatever. we never thought about, the impact, because it is already embedded in the business model that they were thinking, and we are actually not measuring. Maybe we need to start doing that. But we only invested in companies that we believe that had a sufficient, and again, part of our capabilities or vision is to analyze the path to profitability, because at the end that would be kind of a sign of success. So that's how we analyze that. So we're really pragmatic on that end of the impact. So we believe that by investing in the right trends that consumers are asking for, you are per definition part of the impact.
Yeah, it's a really great insight. So thanks for sharing this. And I think it goes very much in line also with what Paddy said before, in terms of the, let's say, mission-driven nature of the founders, whether there is exactly that alignment. And it sounds like, as you said, Roy, and I believe this, I can say this in speaking for everybody, that if this is embedded in the core of the company, that ultimately it will also, show its effects in the scale up of the company. So I think that's, in my perspective, great news. I believe also that a pragmatic approach is probably the right one. I believe that future LPs and broader groups will probably start to look for very hard metrics and probably also try to establish like KPIs that will hopefully be also available across sectors, across companies, sizes of companies, etc. So this should, looking at the trends currently happening, also become like a new metric that will become the norm, I think, for every private and public company in the future. Being conscious of time, we have 10 minutes left. There's one question from the audience that I think I would also like to give everyone the chance to give a brief answer to before wrapping up, which is, what is really the most interesting and exciting part that we currently find in this alternative food or food biotech and food technology sectors? And I think this would also highlight from every single investor's perspective what they are currently looking for. So maybe if we could go, if we could do a last quick, let's say, roundtable on answering that question, that would be great. Just going by order of my screen, Paddy, you're next to me. If you could go first, please.
Sure. Yeah, a good question to end on, but and never enough time for it. I mean, ultimately, I went to a show recently in London that was plant-based. And if I go back, say, 5-6 years when we started doing the work we do now, when someone came to us and said, I've got a gluten-free or a free from or a vegan or that kind of product, we sort of gritted our teeth and said, okay, let's try it. It's going to be worthy, but tasteless. And the reality now is that, I mean, I tried a French bacon there, which obviously isn't bacon, but it is the holy grail. Someone actually has managed to make a bacon that tastes like bacon, caramelizes everything. So for me, I'm super excited that the market now, in a relatively short period of time, has come to a point where there are real consumer options that taste great, that have great value-led management teams that are going to be able to help address some of the climate issues, whether that was their original intent or not, whether it was just a dietary thing that they set out with. But I think it brings all of our environment and world together in a really neat way.
That's great. Thank you. Dikla, you're next on my screen. So if you could go next, please.
Yeah, sure. So the most exciting thing, as I see it, is to imagine the future. And it's great, but it's hard. And I believe that we need to pay attention for competitive price, because taste, it's very important, and also health and naturality. But if we won't be able to give a competitive price to the product, people won't be able to buy it, and it can be great, but no one will buy it. So the first thing, of course, it's price, taste, health, and naturality. And I must say that it is very exciting to be part of this revolution and this great future that all of us need to imagine every day. So thank you all, entrepreneurs and the companies and teams, and all our investors and collaborators.
Great, thank you. Roy, if you could go next, please.
Yeah, for us, it would be a really interesting topic, high value ingredients that can be created via biotechnology or fermentation. Because the main problem, I mean, it's a fascinating technology, precision fermentation, but the main problem that they are trying to solve is that they are going after proteins products that are really hard to match on the price level. But there are huge opportunities on really high value ingredients that are extremely expensive, which the time to market would be, or at least we believe, a little bit shorter, because on less efficiency on the production and biotechnology side, you would be able to enter the market. So, and on the sustainability side, probably it would also match a huge, it will have also an impact. So that's what we are looking at. Yeah, really interesting.
That's great. Thanks, Gil.
Yeah, I think for us, it's a combination of some of the things that were said before. I think we're looking at what we're very excited about is, to see some of these technologies evolve into a space that they can kind of deliver, the holy triangle of what we're looking to do in the food industry, right? Which is, for us, taste is still king for sure for a company like ours that is a snacking aisle. I think very much like Dikla said, I think being able to offer it at cost in efficient, scalable way. I think one of the biggest problems we have with food tech today is there are all these amazing technologies, but all of them are extremely premium. And at the end of the day, and I think also Paddy brought this up, I think we all have a responsibility, especially on the well-being side, to actually provide affordable nutrition. And that's a topic that still the industry is not talking enough about. But all this food tech, great capabilities, technologies, at the end, they'll need to be affordable for the masses. It's not only about scale and size, it's actually the right thing to do. We don't want a small segment of very wealthy people are the only ones that are enjoying a cell-based meat. We want everybody to enjoy it. And the third one is really about, which is maybe not the most exciting one, but I think it's also a lot about the regulatory framework and being able to call these things the way you want to call them. They're consumer friendly, that they're clean label, that they feel like real food from a regulatory perspective and from a consumer perspective on the labeling. It's something that a lot of us, everybody tends to kind of leave it to the end because it's the least exciting part, but it can sometimes be a make or break for some of these solutions.
Yeah, no, absolutely. I can only echo that part. In my view, I think what I find really exciting thinking about this entire space is that if we look at how much capital has been invested in 2020, which already was a peak in global food and agriculture technologies, and according to Egg Funder research, I think this was peaked at around $30 billion last year, which I think, and this is the part that makes me the most hopeful, in comparison to the overall venture capital financing, is still a very, very small portion of that. And I believe, just looking at who we're speaking today here in the panel, but also just speaking to other investors who in the past would probably never have touched any topic around, physical food production, and where you suddenly see investors that came much more from pure software type of investments getting active in that space, is for me just a very positive sign in a way that this will inevitably become more mainstream, and therefore I also believe that a lot more capital will flow into this. So I believe that in the long run, the let's say distribution of capital flow in venture capital will certainly see a bigger growth in food biotech or food tech overall, compared to, let's say, overall venture capital money that will be invested. So I think this makes me extremely positive and hopeful that many more exciting things will happen here. I hope that it's also a very positive note to close this panel discussion on. And just to wrap up very briefly what we've discussed, and really again a big thank you to all the panelists today that we've spoken about, what are the key criteria that we look for in early stage companies? How do we assess brand versus technology, and what are the differences that we would like to see in the respective teams? But also, how do we look at impact, sustainability within those companies? How much of a role will it play for us as investors, but also for our LPs or corporates that are behind us, given that it is becoming an increasingly important topic. And again, with that outlook of hopefully more capital, more exciting technologies and intersection of technology and brands, we are very positive to see much more exciting things in the future. So yeah, with that, would love to again say a big Thank you to everyone who participated today, to the audience for listening and asking those great questions, and again to Jade and the team for organizing this great conference. Thank you.
Thank you, Alex, for the moderation.
Thank you.
Thanks, everybody.
Thanks.
Great, thanks.
everybody.
Thanks, Alex, for the moderation, and thank you everyone for the great discussion. I thought that's really useful in kind of setting out what you're looking for in terms of priorities around the investment space. So we do have our next company showcase session coming up in the next 10 minutes. It was great to see a lot of people engage with the one that we had yesterday, those company kind of spotlight sessions. So again, encourage you to join that session on the platform. I think there's around 4 companies there that have their presentations, but also have the presenters online to kind of engage. So feel free to reach out to them during that session. And then after that, we'll be moving on to our scaling presentation. Thank you all for joining. Great to see those questions come in, and thank you again to our speakers for this session. Thank you all. Bye.
Great. Thank you very much, everybody. Bye-bye.
Bye.
Bye, everybody.